Most people dream of financial freedom, but only a few ever achieve it. Did you know that 80% of investors underperform the market? Even more shocking, a study by Dalbar found that the average investor earns just 2.6% annually, far behind the S&P 500's 10% average return. So, what are these investors missing? In this video, we're going to break down the secrets of value investing, the strategy that has made billionaires like Warren Buffett and Charlie Munger extremely wealthy. You'll learn how to achieve your financial goals in 2025 and beyond using evidence-backed, simple strategies that anyone can follow. Forget about trying to time the market or chase trends. There's a smarter, more reliable way to invest. Stay tuned as we reveal the real reasons why most people fail to reach their financial goals and how you can use patience, discipline, and proven strategies to unlock your path to success. Ready to start making your money work for you? Let's dive in. Chapter 1. The Science of Value Investing. What's behind the strategy? When it comes to value investing, many people have heard of Warren Buffett, but few understand the data-backed science behind it. Value investing is more than just a method, it's a strategy rooted in proven principles. Research by Nobel Prize winner Eugene Fama shows that value stocks often outperform growth stocks over time. This is due to their tendency to revert to their true value, especially when the market undervalues them. In fact, a study from the Journal of Financial Economics found that value stocks outperformed growth stocks by an average of 5% annually over a 30-year period. The reason? Value stocks are typically priced below their intrinsic value, offering a margin of safety for investors. This margin helps shield investors during market downturns, making value investing a reliable strategy. Buffett himself said, "Price is what you pay, value is what you get." It's a reminder that value investing isn't about chasing quick gains but about finding long-term opportunities that others overlook. So, when you dive into value investing in 2025, think of it as building wealth slowly but surely, through patience and smart choices. Chapter 2. The 2025 Investor's Blueprint. How to make your money work for you. To succeed in value investing, you need a clear, evidence-backed plan. The first step is knowing how to analyze a stock. Start by looking at the price-to-earnings (P/E) ratio, which compares a company's stock price to its earnings. The lower the P/E, the more likely it is that a stock is undervalued. But don't just rely on one metric. The return on equity (ROE) is another key indicator. A high ROE suggests a company is efficiently using its capital. According to a Harvard Business Review study, companies with high ROE tend to outperform their competitors and the market over the long term. Next, diversify. The University of Chicago found that diversifying across different sectors can reduce risk and increase your chances of beating the market. Don't put all your eggs in one basket, especially when you're just starting. By investing in undervalued stocks across various industries, you increase your chances of success. Chapter 3. The Psychology of Money. Why you're your own worst enemy in investing. Did you know that your mind can actually sabotage your investment success? It's true. Behavioral finance shows how biases like loss aversion and overconfidence often lead investors astray. A 2019 study by the National Bureau of Economic Research found that investors often hold on to losing stocks because they don't want to accept their mistakes. The key to overcoming this is awareness. Legendary investor Charlie Munger says, "The big money is not in the buying or the selling, but in the waiting." This patience allows value investors to avoid knee-jerk reactions to market fluctuations, which often result from emotional decisions. In 2025, it's crucial to recognize the role emotions play in investing. Evidence shows that investors who stick to a value strategy and avoid impulsive decisions tend to outperform those who react to short-term market noise. If you're finding these insights valuable, make sure to hit that subscribe button. You won't want to miss more tips on building wealth the smart way. Chapter 4. The Secret Weapon. How patience becomes your greatest investment tool. Patience is more than just a virtue in investing, it's a strategy. According to a study by Morningstar, investors who hold stocks for at least 10 years have historically seen much higher returns than those who trade frequently. In fact, the study found that long-term investors averaged 6.8% annual returns, compared to just 3.2% for those who frequently traded. The reason behind this is simple. Value stocks take time to reach their true worth. Short-term market fluctuations often cause price distortions, but over the long term, these stocks tend to perform better. The best part? You don't have to do anything except hold onto your investments. This concept was famously summed up by Buffett. The stock market is a device for transferring money from the impatient to the patient. So, as you move forward into 2025, let patience work in your favor. You don't need to chase after the latest trends, just focus on buying undervalued stocks and holding them for the long haul. Chapter 5. Foresight in Investing. Predicting Trends and Picking Hidden Gems. Value investing isn't just about finding undervalued stocks today. It's also about predicting which companies will thrive in the future. A great example is Amazon. Back in 2000, it was a risky bet, but those who recognized its potential before it became mainstream reaped massive rewards. To pick hidden gems in 2025, you'll need to look at market trends. According to McKinsey & Company, sectors like green energy, artificial intelligence, and healthcare innovation are poised for growth in the coming years. Value investors who focus on these areas can find undervalued companies that are likely to grow in value over time. One strategy is to look for companies with strong financials and growth potential, but whose stock price is temporarily down due to external factors. These are the companies that could offer huge returns once their true value is realized by the market. Chapter 6. Achieving Financial Freedom. The real formula for success in 2025. In 2025, financial freedom isn't just a dream, it's a goal that can be achieved through smart value investing. The key is consistency. According to Vanguard, the average investor who contributes regularly to their investments over the long term sees better returns than those who try to time the market. Start by setting clear, realistic goals. What do you want to achieve? A comfortable retirement? A down payment on a house? Once you define your goal, break it down into small steps. Start by investing in undervalued stocks, diversifying your portfolio, and reinvesting dividends to compound your returns. Success in value investing isn't about luck, it's about discipline and staying committed. As Buffett famously said, the stock market is a device for transferring money from the impatient to the patient. In 2025, you can achieve financial freedom by sticking to this timeless advice and making steady, smart choices. Before we wrap up, don't forget to hit subscribe if you want to learn more about how to master value investing and build long-term wealth. Your financial success starts now.